Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we are talking about earnings from Target and Lowe's, just the volatility in vaccine names like Moderna and Inovio. We're going to talk about the reversal yesterday in Walmart. And don't look now, but Luckin Coffee is out actually of its trading halt. It is going to be delisted off of Nasdaq, but it is trading as we speak. So we'll just talk about Luckin Coffee because we haven't talked that since it halted like a month ago. Our guest today is Jonathan Yates. He is a former Benzinga contributor, and he will join us at 8:35. In the meantime, Joel, give us a quick update on the overnight session and what happened.
Oh, we rebounded sharply here. That late day sell-off, forget about it. We're up 32 and a quarter handles at 29.51, getting all those losses back and then some. Knocking on the door, yesterday's high, intraday high. We got two highs from yesterday, believe it or not, 58.50, and then the Global side, the real high, 76 and a quarter. On the downside, look to find buyers here at 29.40 mid-range on the session. Crude took a one-day breather, back up 62 cents at 32.58. We are keeping an eye on the double top at 33. Gold in the green by 10.50, trying like the Dickens to get over 1,800. Silver doing its part. That's up almost 8% at 18.05. Bitcoin, that's up $105 at 9,785. And I don't know if we have any listeners in Midland, Michigan, but
oh yeah, I heard about this.
Did you hear what's going on in Midland, Michigan right now?
Yeah, I saw the video.
Well, I didn't see the video, so I heard about the flash flooding, but what? So why? What? Just storms? What's the deal with the flash flooding?
There was a dam or two.
Oh,
that one broke, and then one's on the verge.
What body of water is that on? That's not on Lake Michigan, is it? Where is that?
No, that's in the middle of the state.
Yeah, what body of water is there that's flowing over at them?
Man,
it's like an inland lake.
I would say
I'm going to Google this right now.
The Midland River. Is there a Midland River? Oh, it's the Tittabawassee River.
Midland, Michigan.
Tittabawassee. And
wow. Holy cow!
Yeah,
I'm looking at a stop sign and you can't even read the whole stop sign. That's like feet of water. Yikes!
Yep, right near downtown.
Holy
mackerel. We've been getting a ton of rain. So
yeah, but that's not rain. So the dam came through and. Wow.
Right. And there's another one coming, or another one has
How
been
far
reached.
is that from the D?
It's a couple hours. It's kind of in the middle of the state. Like if I hold my hand up, like Detroit's down here, it's Midland. Is
that's how they do
here.
it. Show how they do it. And this is how all Michiganders tell you where you are from. So I learned this back when I was like in university days, and you meet some people from Michigan and they're like, where are you from? Yeah, and they show you. I do it backwards, but and then the way I would do it is, you see, here's Michigan, and I'm right here. I guess I have to do it backwards because of the camera. So I go here, and I'm right here. So this is Michigan. This is Windsor. We're just outside this little area there. That's the way I would say where I'm at.
You're right.
But yeah, that's how they do it, because the hand looks like, when it's closed, looks like Michigan. So where did you say Midland is on the hand? Show the hand again. And do the opposite one because the cameras are backwards.
Okay, like this?
I looked right the other way, actually.
It's like it's like in the middle. It's like, in the middle of the lower peninsula. It's a couple hours from
That's
here.
A very efficient way to tell where you're in Michigan. I like that.
And the only time I've been, believe it or not, I'm going to bring this back to horse racing.
Shocker.
I swear to God, back in the day when harness racing was popular in Michigan, they used to run really, nice price races at all the different fairs. And so we went to the Midland Fair, and man, I believe that's where Varsity King went down. It was a pretty scary thing. So I don't think he won there. But yeah, there used to be the only time the Midland Fair for horse racing. But if we have any listeners in Midland, Michigan, man, good luck out there. I hope everyone's okay. I heard people are sleeping at schools and churches, and man, during a pandemic, I think this is the last thing you want to have going on.
Yeah, definitely difficult times there. So. Oh, and the markets don't have difficult times, though. The markets go up on everything here. Buy the dip again works yesterday. I was hoping for a bigger dip. I wanted to buy a few stocks, but the dip really wasn't that big yesterday. So I don't think I actually added nothing, I believe, to my long-term portfolio yesterday. Just kind of stood pat. It was a dip. I guess it was a dip. We dipped 40 points, and we dipped a little more after hours. So if you're really savvy, I guess we were down 45 points from where we were just a couple hours before the close. So we had the late afternoon sell-off. Now we get all of those losses back again. It's like Groundhog Day around here. Buy the dip and sell the rip.
Dennis, the news was absolutely ridiculous that took us down.
The whole Moderna, everything about this Moderna thing has been absolutely ridiculous. So summary, Moderna 2 days ago, and I think we tried to summarize this already. Moderna 2 days ago comes out and they have good news. And that drives the whole market. Obviously, the Fed was a catalyst too, but Moderna tacked on another 40, 50 handles after the Moderna data. So you could say it went up 50, 60 handles on Moderna data. Moderna data, then they're saying, oh, it's not, really Stat News is saying that there's not enough information here. And, obviously everybody just kind of jumping to conclusions that, this is the holy grail. And Moderna sells off significantly and the market sells off a little bit. So this is the way this market is. It goes up on good news and it sells off just a little bit on bad news and eventually bounces back. So tough market to be short.
And then in addition to that, the CEO was on Fox Business this morning here, and he basically said that we said the same thing as Stat News. This is interim data. This is not meant to be considered the end all be all. He says data will be published in weeks, not months. And that the phase 3 trial will have many thousands of people, though the exact number has not been finalized yet. And so it's not the company's fault that everyone took this and ran with it. You know what I mean?
I agree with that. And there was a former SEC officer there on CNBC last night, and they brought him on, and he was talking about apparently there was a couple insiders of Moderna that sold into the pop, and he was full on like they need a full investigation here to Moderna because they have this press release, and now they find out there was a few people selling stock. I mean, I don't know if it's, if this was manipulated higher. I don't think I agree with that. They threw out the data and the market interpreted how it interpreted it. So I don't really see why there would be a full investigation here into this. But regardless, that's what's happened. And the market here, if we're just looking, or last night on this. So this SEC officer comes on CNBC. Stocks trading flat, MRNA, trading around 71.67. It turns around on it starts going down. It falls $5 in the next 15 minutes because that SEC, former SEC person said that there should be an investigation. It's bounced all the way back here this morning because the CNBC had the interview with Moderna this morning, and he basically just said, the market interpret the data how it wanted to interpret it, which is kind of how I see it too. So that's bounced all the way back. So it's been a yo-yo session for Moderna here, selling off $5, getting it all back, going green a few minutes ago. Now it's back to the red. Moderna really chopping around.
I will just, the 76 number is important for this because that's where the offering is. Also, yesterday's high, 79.75. That's right close to the all-time closing high. So we will keep an eye on that as resistance. Dennis was talking about the dip in Moderna, MRNA. And then I talked to Spencer about this yesterday, and I'll give you the low on this. You dipped down to 65.80, but we are only going to refer to this stock from now on as MRNA. Okay?
Why? Because of the ticker symbol?
Yes. And also, and if anybody gets this in the chat, this is a little off topic, but if anybody gets this in the chat,
again?
There was a TV show
in the 1930s,
70s, a very popular TV show. And there was a main character and the main character's best friend was named Myrna. What TV show was that?
Oh man, we got the trivia coming at you guys.
The
here.
18.
2 days in a row trivia, and the winner gets winner gets 30-day trial to Benzinga Pro.
I don't think anyone's gonna get this.
Winner gets 30-day trial to Benzinga Pro. You just got to email us or your information. So who is the winner? I have no idea on this.
I don't think anyone's gonna get this.
Again, I was 0 years old in the 70s, so
you gotta, unless you're Googling it, you probably don't know.
I've got my eyes on the chats.
No one knows.
3 of them there.
Wait.
You can tweet at us too with that.
Wait, someone says Jackie Gleason? What is that?
No. That was was that his wife's name? No, what was his
Jackie Gleason?
No, Jackie Gleason's wife. Nope.
We have some
Rhoda. Nick Bellucci wins it. It's Rhoda.
Rhoda.
Yeah.
I've never even heard of that.
And it was a spin-off
first? Did you check all the chats? No, XII. There's one before Rhoda.
All right, I see a few people.
I had it.
There's a few people who had
a lot of. We might have to give out a couple.
Okay,
a couple. And it was a spin-off.
Jason Rasnick likes it when we give out free subscriptions.
It was a spin-off.
No, he doesn't.
Let me finish. It was a spin-off.
He's gonna text me right now. Stop giving out free subscriptions.
It was a spin-off of the Mary Tyler Moore Show.
Got it.
Do you remember that?
I've at least seen that before, but I've never seen.
She throws her hat up, and that took place in Minnesota.
Right.
But the last thing, off topic, and then I'll totally just talk about stocks again. And this is kind of important. Do you know that they're running the Belmont Stakes before the Kentucky Derby and the Preakness?
Yes, I do.
Is that that is almost gonna guarantee a no Triple Crown. I'm telling you that right now.
All right. Well, we can talk about that when it gets closer to the date on June. What's the date?
I just looked it up, like June 9th.
Okay.
Yep.
Yeah, or June 20th, right?
June 20th. Yep.
Yeah. Okay. So we'll talk about that as we get closer. Let's bring it back to the markets, though. In addition
I don't even remember where we were. That's
okay. So, but in addition to Moderna,
Myrna.
But we had more vaccine news this morning. This is from Inovio, INO.
Oh yes.
Their COVID-19 vaccine trial demonstrates, quote, a robust and neutralizing antibody and T-cell immune responses in preclinical models. And you can see the stock popped hard.
Is this why the market's popping again? Is this another catalyst for the bounce back?
Could be.
I just got a question to all the bears out there and the bulls out there. Are we going to rally 40 handles every time somebody says something positive about a vaccine and then sell off basically no handles when it's not positive?
Yes.
Oh, that's a tough market to be short. Buy the dip. It's this market. The market just grabs any headline it possibly can grab. Jeremy Newsom sent me a funny video. I don't know if he sent that to you too, Joel. But it was that. Anyways, it's a video just talking about how this market, and they put some words over it. And I don't think we can show it, but it's a YouTube video, and they're just talking about the bear case and how you can outline the whole thing. And it really seems like, if you were just living on a desert island and you were going to say, we're going to go into this pandemic and it's going to be around the whole world and 2,000 people in the U.S. are going to die a day from it. And businesses are all going to be shut down. And there's going to be a global recession. And the market is actually going to go up 30% in March and April because of this. You'd be like, what the hell?
Well, not in March.
At the end of March, since the end of March. So obviously March we went down, but since the bottom, which was March 23rd, we are up 30%. So in the last month and a half, unbelievable that the market continues to climb the wall of worry. But I'm the same way. I'm like, I have no shorts on, zero. I've tried to short the market a few times. Like I shouldn't say I have no short. I always have trades on my trading account, so I'm long short, but I'm hedged there, net market neutral. But I have no swing shorts. And when I'm bearish, I have swing shorts on. Like I was bearish back in January. I have no swing shorts. I have no shorts in my long-term portfolio, which I never put shorts in my long-term portfolio. But it's tough. It's tough to be bearish.
Yeah. Let's go with Luckin. I'm going to get it right. Luckin Kitchen.
Luckin Kitchen. It's back. LK is back.
I got it right, didn't I? Oh, no, Luckin Coffee.
He always says that. He always does that.
You do it.
At that time, I tried to do it right because the name of the place was Lucky Kitchen.
Okay,
well, right.
6 weeks later.
Yeah, Luckin Coffee said they got a notice from the Nasdaq that they're going to be delisted, and so ahead of that, they have brought the stock out of a trading halt, I guess, to just let people get out if they want.
Yeah.
But there you can see the action this morning. So
stock unbelievable.
Yeah, what do you do?
It's unbelievable that this, if you're in a position, so what they come in and they do is they let it trade. I don't know if it's for the day. I don't know when they said it's going to be delisted, but they kind of let it trade so people, that want to exit their positions, so the options can have the exits as well, because there's options that expired back in, April. Those options, would seemingly be off the board worthless, but it's not the case, because when a stock gets halted for that long, that expiration date gets extended to the first day of trading. So if you had options on this in April, or expiring any of the weeklies, even back to March, those option expiration will be today. So it'll be, I believe, at the close today. I'm not sure if it's the opening price or the closing price, because this doesn't happen very much, but it is extended to today. So if you're wondering what my April calls are doing or my April puts are doing, they've extended to today, and that's how that works. At least that's my understanding. We don't see that happen very often.
No, we talked about that when we did that research, when we're thinking the markets may close down, when when this crisis broke out. And as we've said several times, just incredible. I mean, the markets really have performed well. And I'm not only talking about the percentage increase, but the order flow and you and I went back to the spider versus the SPOOs, and they were halted and everything, but it all came out in the wash. And the difference in the ARBs with the spider and the S&Ps and the reopenings, of course, there was some wild action there, but really credit to the market structure. It really held up well.
So back to the Luckin Coffee. From my experience, I already trade 13 million shares. There's going to be people who are saying, oh, this is going to bounce back. From my experience, when the companies get delisted, they usually just fizzle out. And usually when they go off board, they become a little bit harder to get in and out of. This will still be somewhat liquid when it goes off board, but you can get a little bit harder. It's not as easy to get in and out. So from my experience, on these types of things, is they're not usually buying opportunities. But that being said, it's $2. It's like if you're buying it now, it's like a call option. But obviously, we know there's a lot of issues where they're fabricating numbers. So I'm out. I don't want any part of this.
All right. The chat wants us to talk about some winners. So
there's been a few. We talked Inovio, but if I'm looking at my screen right now, holy cow. If I'm looking at my screen right now, I am struggling big time to find something red. Even gold is up today. So I'm looking at most of the S&P components here, and I don't see any red. There's just a few smaller companies, but for the most part, all your companies that reported earnings this morning, Lowe's, Target, they're all trading in the green.
Let's do those.
This is MCK is trading red. We found one. McKesson reported, and it is trading red. But there is not a lot of companies. Urban Outfitters reported last night, it is trading red. Not a lot of red on the screen today.
Real quick, INO, you did get a big pop up to 1935, back down at 1710. So that's a little bit of an indication that there's a sell the news here when you get this many red candles. INO had another pop up to, where did we get to on that day? We got over on the dailies. Now this is way over that daily high. $16 was the prior high, the move. Just had people stuck on this one. I'm seeing
$19 on March 9th.
$19, really?
1936. That's what.
I see. 1936. Good catch there, Spencer. And then where'd we go to today? 1935. Good catch, Spencer.
We taught him well.
Making up for his poor performance on options trading yesterday.
Let's not go back to that. Let's not go back to that.
This one.
No. Moving on here.
Embarrassing.
Right. Lowe's earnings this morning. Lowe reported actually it was a good quarter. They beat on the EPS and they beat on the sales estimate as well. So the EPS $1.77 versus $1.31. Sales 19.7 versus $18 billion. So a nice beat on the top of the bottom line for Lowe's last quarter, and they gave comps as well. I believe those were above estimates.
Yeah, nice numbers here. Both were pretty good. And you get the fact that it's reporting on a huge update too, which always helps. So big pop here for Lowe's. The stock has now doubled from the lows. low too many, saying low too many times. $60 to $123 in the last month and a half. I will say the easy money has been made on the long side. I could be wrong, but the stock is approaching all-time highs. We saw what happened with Walmart on its good numbers yesterday when it was approaching all-time highs. They faded it all day and took it red. I was a little bit early on it. I thought that might happen, and obviously I didn't make any money on it. But so disappointed myself. But LOW, I don't know if it's going to do the same thing. This is a really good report. You also had Home Depot. These are two loved companies. I'm not buying anything up 6%, though. Again, this market keeps punishing you if you were chasing. Just like Moderna, punished if you were chasing. Just like Inovio, if you're buying it at $19 this morning, punished if you were chasing stocks higher. We've seen this, in some cases it pays to chase. In this market, it has paid to fade.
Small disclosure, have a small long-term position in this one. I don't.
You're in everything. What don't you own? How many stocks do you have in your long-term portfolio?
There's a couple different ones, but I'm not you. I don't have like 100.
I'm down. Because I've sold so many.
Yeah, well, it's easy to have more than you. I have 2. But you sell.
How many do you really have in your long-term portfolio? How many stocks?
I do not have it all in front of me.
Ballpark it. Like 20? More?
I'd say
more
50.
Or less.
50.
Oh, so you have a lot too. We're both the market. When you get 50 stocks, we're kind of like the market.
Yeah, but they're smaller positions than what you take. But anyways, and I don't trade in and out and look at them and say,
I know, I can't stop myself. I just trade everything.
Yeah.
I'm a trader.
It's easy when you have a never sell portfolio because then you never sell.
I was doing a lot better when I had it that way. I used to say, this is my long-term stuff, never going to look at it. And that's how I got some really big winners. But now I've turned into full trader and I'm can't stop myself from even trading my portfolio. So I haven't talked about going to trade my long-term portfolio because it seems like that's the way the money's made here right now. You book the gains when you have it. If you don't, they turn into losers.
Great number for you folks. 126.73. You hit that in February and then spot on 126.97. So there's your area. You hit that level in February. You hit it again today. That's within 20 cents. You backed off $3 from there. Who knows? You might make a run at it, but I'd say at least the first time you get near 126, 126 and a half, I'd have to call that resistance. Since making that high, if you're brave of heart here, 123 has held up since 7:30 as support. So early range, just based on the pre-market trading, 123 to almost 127.
While we're here,
go to the other one.
Might as well go to the other big one of the day.
Yeah.
Other big retailer, I guess I should say, because we also got RCL. That's interesting. But Target out this morning with earnings, adjusted EPS of 59 cents versus a 68-cent estimate. Sales of 19.6 billion versus a $19 billion estimate. So the sales beat. Earnings missed, like we've been seeing a lot of earnings are being weighed down by increased costs as a result of the virus. Comps for the quarter up 10.8%.
Nice quarter.
Digital comps is e-commerce sales up 141% on a year-over-year basis. So it's a good quarter. Is pretty much what we're seeing with Walmart. Same kind of story here. Strong sales and earnings weighed down by just higher expenses.
You know what, though? And I would just say I'd be cautious fading it for the simple reason is a lot of people are going to say, okay, well, Walmart faded. Just like I said on Lowe's, Target faded. Target Direct Pure, you could have a few people saying, oh, it's probably going to fade this too. This was a pretty good report. I know the numbers missed on the bottom line, but like you said, there's a lot of reasoning for that. Again, though, you're coming up near all-time highs, $130. So major resistance up near 130. Get anywhere near that level, I think that's resistance, but it's tough in here. Up to $3, you got overhead supply $3 higher. You're kind of in this wild pitch area or slider. It's gonna be a tough ball to hit. I'm out.
What are you? What's that show?
So, what is it? Kevin O'Leary, Shark Tank.
Yeah,
I'm
Shark
out.
Tank.
I'm out. I'm Mark Cuban. I'm out. And for that reason, I'm out.
Yeah. I was gonna say you have to say, and for that reason,
that reason, I'm out.
Different looking chart than that Walmart chart, right? Walmart spiked up to 131.99, and then you could just feel the sellers in there, right? So here you did have the spike up, the initial spike up to 128 even, And then it's sold all the way off at 121.50 in a wild bracket. And now someone's bidding it. You know, you could just look at that 15-minute chart and it's bid and they're pushing it and they're punishing the shorts. So I would just wait to see what happens, what that high is right off the opening bell. And then, you know, if it exceeds that, 129 looks like a decent level to me. That based on the daily highs, that's ahead of the pre-market high. Pretty wide open here between 125.5 and 129. I don't know if you're going to get that far under 125.5. I don't know. It could be some considerable downside there. But Dennis, man, you don't mind me putting in the article about your Walmart. Well, I didn't put it in the article, but we talked about it on the show yesterday. Your Walmart short. You were just a little.
I should have just held.
Yeah,
it was too early. But I like to get flat after this was an overnight trade. It was a play that, hey, maybe they'll fade it on good numbers. I didn't foresee the $5 buy it on good numbers, and obviously, I should have held on to it. I should have been a long-term day trader in that one.
One thing we didn't talk about also, and someone in the chat, I want to say it's Aviator One is pointing it out in the chat, is that Target e-commerce sales where the growth rate was twice that of Walmart's. And we didn't discuss this yesterday, but Walmart is actually, they announced in their report that they're winding down Jet.com. Remember, they paid $3 billion for Jet.
What is that?
Remember that back in 2016, this was like gonna enable them to scale up their e-commerce, and Jet was a rival to Alibaba, and they paid $3 billion for Jet.com in 2016.
Didn't work out,
and they're shutting it down. So they haven't been able to scale online the way they wanted to.
I mean, you put it in perspective, and I saw a great, and I tweeted it out. If you go look at my Twitter, I don't know if you can show it, and I'm trying to find who tweeted it. Actually, it was a few days ago. It was on the weekend, and I tweeted this out, and it was talking about how much percentage that Walmart online sales and Target is up compared to Amazon. And okay, here it is. It was Michael Batnick that actually tweeted this out, and you look at the one chart, and you can say, wow, you look at it and it's like, holy cow, Amazon online sales were only up, 50%, or I'm ballparking it here. Walmart online sales were up, 200%, and Target was way more than that. They're just talking in the last month. And then you look at relative share of online sales, and Amazon is still like 96% of all online sales is like between Walmart and Target when comparing it to it. So Walmart's got like 3% or 4%. Target's got a couple percent. Amazon's got 96%. So when you put in perspective, you can grow a lot when you only got 1-2% of the market, and Amazon's got that big a chunk. So Amazon is still your player in online sales. They're not even really putting a dent into Amazon.
New all-time high here we're approaching in Amazon, right?
They got it up.
I know.
Yep. You guys I sold the trade portion and I held the investment portion. Yeah. I think I'm up about 200 points now.
Yeah, that's a nice one. That was the day of earnings. I remember it. They jammed it into the close. They closed at 24.70, made a high at 24.75. The water, everyone had to be in. Closed at 24.74, and then it hit. Oh boy, this is a double bottom. It hit 22.58.19 and 22.56.38. That's what you bought it off, right, Dennis? There was the pair of lows after
the double bottom.
Yeah,
I almost got this one right at the bottom. I think I paid $22.65.
Wow!
So I missed by about $9 on Amazon, and I took a double size position because I'm like, I like it for a trade, but I've always wanted in my long-term portfolio, and I think with this COVID stuff, I think eventually Amazon's hitting 3,000. I said to myself, so I took a double size trade, a double size position. I sold the trade portion for about 100-point gain. And then I've held the investment portion. I'm up 200 points, and we'll see. I think Amazon's going to 3,000. So that's why, like I was saying, I think Shopify is going to 1,000, which obviously I'm not participating anymore. I'm hoping to get some miracle pullback to get my stock back. I guess everybody else is too. Amazon, I plan on holding. I know the valuations aren't that cheap, but again, the stock is just dominant in online sales, and I think online sales is just going to be more and more people shopping online after this pandemic.
Hey, while we're on the topic of e-commerce, we might as well go to Facebook here because they announced this yesterday.
Yeah.
And I guess the best comparison would be This is like Facebook's answer to Shopify. It's sort of a Shopify Amazon combo here, but they announced Facebook Shops, which is a service for businesses to create an e-commerce site operation through Facebook. So it's basically Facebook's answer to Shopify, the way Shopify and Amazon kind of work now, where it's about the tech. It's a great idea for Facebook.
Smart.
It's not like Marketplace, which is more of like Facebook's answer to eBay. This is more of like Facebook's answer to Shopify or Amazon, where a business can actually take their operations online and do it through Facebook.
They're looking to use, they have a huge user base, and they're looking to obviously profit from that in different ways. And this is really smart, right? Moving to online sales. So I think this is a fabulous idea. I wish I still had my Facebook stock. I sold it. Obviously, it was a big mistake. I sold it ahead of the earnings because I was nervous that I'd run up too much into it. Again, wrong. And this is one I'd be scrambling to get back in. But, if they're going to start getting into e-commerce in different ways and figuring this out, I think there's a lot of people, smart people at Facebook too. Valuation has always been fairly reasonable at Facebook, just like Google. So I like this idea. I like the stock. I'd be a buyer of pullbacks. Again, always buying pullbacks, not buying rips.
224.20. That represents the all-time high in January before the market melted down. You are approaching that level very quickly here. 223.88, and it's just, you backed off a little bit, but just someone's bidding big underneath, maybe offering stock up top. So we'll just keep an eye on that all-time high. It's really the only target I could give you. Wait, did I say 224.20? Yeah, 224.20. That was your all-time high. So it's the only level I could give you there in Facebook. And Shopify doesn't care. Shopify.
Well, I think Facebook might be working with Shopify on this.
Oh,
but I don't know about that.
Face Shop.
No.
Shopify, just this, again, it's the Canadian aspect of it that we can really continue to drive this story too. I would love a pullback in Shopify. Again, I'm not sure I'm going to get it. People want to talk about Spotify. Years ago, when Spotify and Shopify were out there, I got them confused sometimes. I was like, Shopify, when they were first both coming out, 3-4 years ago, I was like, okay, gotta get this straight. Spotify is the music company and Shopify is the online retailer. But I've got it straightened out now, obviously, because I love Shopify. I've never really owned Spotify, although my wife has a subscription to it, so maybe I should have. Joe Rogan Experience comes in, and this stock rips higher. We love Joe Rogan. I don't know if I'm paying up $20 for Spotify, but this market's crazy like that. I would not want to be short this stock right now, especially, when you get stocks that are making highs, and obviously we were back up over 2019, but I think you could eventually challenge the $200. I think the all-time high is $198.99. I think eventually could challenge that. It's got all the wind in its sails right now. As a trade, I like it. As a long-term investment, the valuation's crazy, and it feels a little bit like Howard Stern and Sirius here. But short-term, hot.
It's a little different. They're a little more diversified than Sirius is. Sirius kind of hitched their wagon to Howard Stern.
Yeah.
But besides that, they don't have much else.
My wife loves Spotify. She has the family plan. We have the family plan, and we have you got 5 different users for $12 a month or something, or $15 a month. So
does she listen to Benzinga's Pre-Market Prep on there?
She should listen more.
We are on there. We are
on Spotify?
There.
Yes,
we are on Spotify, and I think it's Agnes Crowley.
Why didn't we get $100 million? How much did Joe Rogan get? We should have got a little.
It's a great question.
We're
come
next.
On, Spotify, come knocking on our doors.
Well, Dennis,
we're ready to sign for the $100 million.
I do a mill.
The catch is
don't sell yourself short.
The catch is it's exclusive, so we would have to abandon YouTube. We'd have to abandon our site.
What we do with without our YouTube users?
It's exclusive.
We love our YouTube channel.
Yeah.
Okay, deals off the table.
Deals off the table.
Deals off the table. Sorry, Spotify, you should have hit the bed.
But no, I think we've picked up a couple listeners here to the show from Spotify.
Joel, you want to give us some quick levels in Spotify?
I don't know what the hell to tell you. The thing had a big move yesterday.
Rocket ship mode.
Let's see, where did we get to? 179.69. So you backed $4 off that move. I believe that was from yesterday's session. So that's the only thing I can give you. Test that. I don't know if there's a seller at 180 or not. You backed off to close at 175.03. I think if you don't hold the close here, that's where it gets to be a slippery slope because, what do you pick between, that and yesterday's low at 161.57? So if you want to trade this thing short term, you're going to have to find like a 15-minute chart, or I don't even know the daily pivot. I can't figure that in my head right now. 80, 70, 150, 62, 10. I don't know, maybe 168, 169. But I mean, that's just throwing darts against the wall, guessing on that one.
All right, I want to go to our guest now. Jonathan Yates is a former Benzinga contributor, and I want to bring him on now. Jonathan, good morning. Thanks for joining us today. Oh, let me see if I can hear him. Let's try this.
Can we see him, or he doesn't have video?
Jonathan, can you hear me?
I can hear you, yes.
All right, good morning. How's it going?
Thank you very much. Things are going well. Certainly not the flooding you're having out in Michigan.
Yeah, that
We're
is.
okay in the D.
I mean, if you had dams breaking on your 2020 bingo card, congratulations. But Jonathan, we brought you on today because
we might be out in the background there.
Yeah, can you mute the background?
Yeah, turn us off in the background there. But
they always say that when you're on the radio. Like, could you please turn your radio down before you come on the show?
We were talking about an article that you had written for Benzinga back in 2019. 3 reasons to tap into home equity to buy stocks. And we just wanted to get your thought. Actually, can you recap for us sort of what happened around that? Because that created a little bit of a stir.
Sure. They had me on MSNBC with that, which is pretty interesting with Hank Greenberg. And, it's the first time I was ever on television for something like that. And I enjoyed it. And, all I can say is that history has proved me correct. The Dow back then was around 16,000. Now it's, up near 24. So that's a 50% rise. And I don't think real estate has really risen that much. I know the numbers will show that it's up, but that's just in a small percentage of the country. I've read articles that said about 90% of the prices are still pre-Great Recession level. And I believe that from what I've seen.
So recap the argument again that you made in the article that really stirred up everybody. And obviously some people.
Sure. There's 3 reasons why. And these reasons are as applicable today, actually more applicable. Number one, you get a lot more diversity. When you keep your home equity in your house, you have all your money invested in one house, on one street, on one block, in one community, in one state, in one country. If you put your money in an S&P 500 index fund, you're diversified around the world. So, you just get a much better diversity. Second of all, you get a higher yield. You can borrow now, you can refi probably at about a 2.5 or 2.6 from what I've seen. And, you get you get to write the mortgage interest off your taxes. So you get that. And with the market, it's been up, 14% over the last decade, the market. So, if you borrow at 2.5 with a 14% return, you can do the math there. And the third thing is the liquidity. Sam Zell, I was at the Invest for Kids conference in 2013, and Sam Zell, the legendary investor in real estate, was there. And he said liquidity is a sign of a healthy market. You can buy and sell your stocks, right away. You know what the price is. And you can trade for free, too, as part of that liquidity. If you do it in a tax-free account, you're not going to pay capital gains tax. And if you're a frequent trader, you can trade for free. You're looking at least 10%. To buy and sell a house, and you don't have access to the liquidity right away. So, you have better diversity, higher income, and more liquidity.
We should add that we're not recommending this strategy. People do this. It does come with a higher degree of risk.
He was chopped up when he announced, when you were saying the original strategy, your audio was chopped up, so some people might have missed it. But obviously,
Sure.
The original strategy was to take money out of your home to invest in the markets.
Yeah, can I make a perfect timely example? You guys were talking this morning about how Lowe's has doubled. Well, ESPN just finished a 10-part series, The Last Dance, on Michael Jordan. He just lowered his house to $14.5 million from an original selling price of $29 million. So you don't think he wishes he had put that money in Lowe's instead, and it would doubled rather than his house falling in half?
I don't know. Maybe. Yeah.
What about now? I mean, would you put?
Oh, even more so now. I mean, I get a email from this real estate agent, Dr. Housing Bubble, which I highly recommend to anyone interested in investing in the financial markets from a real estate point of view, he's pointed out there's $1 trillion in forbearance now for mortgages. My father used to be chairman of his credit union. He said, when a mortgage went into forbearance, it's generally 90 days late. He said, forget it. You got to write it off. And so, you got $1 trillion in mortgages you're going to have to write off. It's going to have tremendous impact on the real estate market. So, I do it now. You look back in November 2010, Ben Bernanke, when he was chair of the Federal Reserve, he wrote an op-ed for the Washington Post that basically said, we're going to use the stock market as our economic engine, and we're going to keep interest rates low so the stock market will do better. So, do you want to have the U.S. government behind you? Do you want to invest with the Federal Reserve? Or, do you want to invest against it in real estate?
Yeah, it's certainly an argument to make. I think as what happened last time, this is a pretty divisive
I've
idea.
Always been a fan of
high risk, high reward.
Yeah, I've always been a fan of not investing on money you can't afford to lose. So it just depends, I guess, on your own financial situation. So should people be paying out their mortgage early to invest or investing in stocks?
Borrowing against their mortgage, not.
Yeah, it's a little bit of a controversial subject when you're taking money out of your mortgage to invest in the markets. Obviously, it works very well when the market's going up. The question is, when you get into a situation the markets start going down, that can be an uglier scenario. And, obviously.
Well, then the thing to do then is I've always been a big fan of dividend income investing. So invest in dividend aristocrats, those stocks which have a history of raising their dividend every year for 25 years. So you look at ExxonMobil now, it's yielding over 8%. And they've raised their dividend every year for over 25 years. So, you borrow money at 2% to get a raise every year at over 8%. So that protects you on the income downside.
Yeah, and just to be clear, what Dennis said is super important. Don't invest any money that you can't afford to lose. This is true for any strategy, whether you're, borrowing against your home or not. Any money that you have in the market should be money that you can't afford to lose in the first place. And
tell us about so you went on, was it CNBC or MSNBC? Who did you go on with? You go on with like Herb Greenberg?
Yeah, it was Herb Greenberg. Yeah. I remember the segment.
Yeah. Tell us about that.
I enjoyed it. I was living in Florida at the time, so they saw the article. They obviously wanted to talk about it. The points he made were not very good at all. It was sort of like more being like a comedy routine rather than a serious discussion vis-a-vis, investing in real estate as opposed to equities. So, I enjoyed it, but, I didn't really think it was a serious discussion. I didn't think, he, really did that well. No, you just look at the stuff. He didn't know the numbers. When I mentioned the dividend income aspect, he makes some smart aleck remark. Well, dividends, they're just, everybody goes for the high one that collapses. Well, that's not true. The average dividend on the S&P is 2.2%. So, I understand they have to entertain, but it might have been entertaining, but I don't think it was enlightening for the listeners.
Wait, were they angry at all, or were they incredulous, or I guess what was the
incredulous? I'd say.
Yeah. Okay. That sounds about right. And then last thing for you, Jonathan, have you done this?
Have I done oh yeah, without question. I've been buying and selling. I've day traded, done real estate. I've done all sorts of investing in this. I very much have done that. Very much the type thing. A lot of times have you guys ever heard of the expression hard money?
No.
Hard money in real estate is when you go to basically a private borrower. It's very expensive, but, I've done it 3 times. I made money off of it, and I'll do it again. You just basically go to a private borrower. You generally have to put up 3 points. It's probably about 10 or 15%, but it saves you the hassle of going through the financial institutions, because the financial institutions, when the market turns south, you're not going to be able to borrow against your real estate, and you're certainly not going to be able to borrow against your real estate if you lost your job. And at that time with Mr. Greenberg, this was 2014, we were still struggling to come out of the Great Recession. And, you had bought a lot of people with, what they called liar loans, no doc loans, and stuff like that with their homes. So, I still think there was a lot of concern that anything having to do with real estate was going to be based on that. The Dow had bottomed out in March 2009. And like I said, was only at 16,000. Well, what's interesting, in March 2009, it was around 5,900. So it had more than doubled by that time. So you think they would have wanted to jump on the bandwagon since the Dow was obviously surging and real estate was only rising in a couple of areas. You know, you may make another point, too, about real estate investing. You know, Sam Zell, you know, they asked him, are you buying all these thousands and thousands of foreclosed single-family homes, which a lot of institutional investors have to rent out? And, you know, he made this look, this incredulous look, and said, you don't think they came to me first? And, you know, you don't want to buy a foreclosed house because when you think about it, when you buy a foreclosed house, this is what that means. It means the seller could not sell it to cover the mortgage. It means he could not rent it to cover the mortgage. It means a financial institution couldn't sell it. And most important of all, it means none of the real estate investors in that area who know the community better than some, you know, 22-year-old analyst with a hedge fund in Singapore or Manhattan wanted to touch it. So, you know, you've got real estate now. A lot of institutional investors have bought thousands and thousands of these foreclosed homes, and they are in trouble. I can tell you, if I was looking for a stock to short, it would be those ones like that have bought up those foreclosed properties to rent out.
All right, Jonathan Yates is a former Benzinga contributor. Jonathan, thanks so much for joining us today. Stay safe.
Hey, great. You guys have a good day, and thank you for having me.
All right.
Real quick here, someone just threw in the chat ACB here, and man, the stock, the bloom came off the flower on that yesterday. Yeah. I wrote the article about it the day before. Man, you just got to sell those things when they're going up. And like I had no idea, we hit 1968. You couldn't get there on Tuesday. You only went to 19 in a Q.
Little double top, really.
Yeah, a little double top.
Kind of.
If you were playing it safer, when it went through that close of 1710 yesterday, I was like, hey, okay, I'm gonna wash my hand of this little pump and dump. But now if you're trying to sell into a rally here, you got company, folks. You got company at yesterday's low. You got company at 1465, the close. Who's going to be buying it now? What's the catalyst, right?
Yeah.
What's going to send this thing up? So, you know, really hard to call those low float stocks, but it came up at the chat, and I just wanted to give my 2 cents.
We gave it yesterday, and we said this like a hot potato. I said, when we look at this thing 6 months from now, I said, I think it's making new lows. I said, I don't know where it goes in the short term. These things can go crazy, but you don't want to get stuck with them. When you see the reversal candle like that, there's a lot of people caught. I think the party is over here. I'd be selling any type of a rally you get. I don't think you're going to get a big rally. I think you get back up to 15 bucks. I'd be selling it. I would not want to own this stock just for the simple reason is that I'm still thinking for its fundamentals, it's got some serious issues. This was nothing more than a short squeeze. We squeezed them for a few days. I think the party's over here. That's my opinion.
All right, let's go to RCL. They had a earnings report out this morning, and it wasn't on my calendar yesterday for some reason, but they're out this morning.
Sleepy looking chart.
Well,
here.
It was. It's going to be a major. It's going to break the chart basically on.
Well, we knew it was going to be ugly. I said this. Yes, I knew they were going to report, and Trader Upright was talking about this, and I'm like, shouldn't we just go long this thing because is it not going to rally no matter what? I mean, everybody knows it's going to be terrible, so probably just rallies.
Yeah,
here it is. It's terrible and it does rally. So I went long CCL. I went long Sympathy, which worked out. I should have obviously went long.
Good trader logic there, Dennis. Really good trader logic. I like it.
That's like ridiculous. It's how this market trades. I mean, it's going to be it's going to be bad. We know it's going to be bad. Its quarter is going to be bad. So it's probably all priced in. It was, and the stock's up.
Not much you can say. I want to get the numbers year over year just so you can just compare them. But their adjusted EPS for the first quarter was a loss of $1.48 per share compared to a gain of $1.31 a year ago. Sales of $2 billion down from $2.4 billion a year ago. They said as of the end of April, approximately 45% of guests who had booked a cruise had canceled or had asked for refunds, and talked. They're actually reflecting the line from the airlines where it's not getting worse. Which, how much worse can it get?
It's unbelievable. You're going to have that. This is as simple as this trading is. You just got to take it for what it is, that this market is priced in all bad news. The report's an epic disaster, but we knew it was going to be. So unless they were going to say we're going out of business, I mean, this stock was probably going to rally on this report. And so it's up. So if you're scratching your head and saying, how are they rallying on those numbers? This is the very definition of it's all the bad news is, potentially priced in, at least for this earnings report. A reason I'm not buying this in my long-term portfolio is I'm not sure that they don't go out of business. So longer term. So they may, and maybe we pull out of this and maybe they're going to be okay. They say they've got some liquidity for a while. But again, these stocks are not, this stock is probably going to be $100 stock or it's going to be close to zero. So it's not a simple fact like a year from now it's going to be at $43. I don't think so. It's going to be it's either going to have a big move higher, it's going to survive, and bookings are going to go back, and we're going to say, wow, that was a great opportunity, or there's going to be some serious dilution, capital raising, and problems to finance themselves through these issues. So that's the two scenarios that I see here. I'm not willing to bet my money on either scenario.
Couple things here. Number one, it's a really, really sleepy chart here. I mean, like snoring sleepy here, right?
It looks that way, but these are big little individual moves. I mean, you put in
They
perspective,
are.
34 to 43 in 3 trading sessions, a huge move.
It does.
So it's funny, the perspective, just because it's had such a big move, it looks like a sleepy chart compared to the March move, but it could go up. It could go up for a bit. I don't want to be short this thing either. Right now, I don't want to be short anything. I don't want to be short. It's a tough market to trade. Again, as day trades, maybe you're shorting, but if you've got this full on we're eventually going to implode, the implosion, I don't see it happening in the next week or two. So I could see I think we're going to go up above 300 SPY and really squeeze the shorts for a little bit, and then eventually, pop the bubble. But who knows? Maybe we're just going to get out of this thing too. So just trade what you got. I'm still playing the fades.
Let's see here. You're trading in the pre-market. You're trading up $1.21 at 43.36. I think you could just use your dailies here. A couple highs, 44.31. You haven't exceeded that yet, and then 44.98. So let's plow through those two levels. Let's have a good day on the upside. Get above 45. Oh, I see another high at 44.74. So you know what? I'm just going to reserve comment. I'm not going to give you anything over $45. I think if you get up that area, you're buying it early. That could be a profit target for somebody. Not me, but that's what I'm looking at. 44.75. If it doesn't get the hop and get over 44 and go 44.10 bid, 30 offer, 30 bid and a half.
It could be a fade.
Yeah, it could be a fade. No trade on it now. If I had a swing long on it, I'd be looking at $45.
All right, 8:53 here, about 7 minutes left in our show. We got through my list. I want to go through some stocks in the chat, unless you guys had anything else you wanted to hit. Dennis or Joel?
What do you
Dennis, do you got anything?
I had Spot, LK, INO, main ones on my list. And INO, I'm just going to go back to that because I never really gave my opinion on it. It's faded significantly. I would look at Moderna and compare it to INO, and I'm not buying anything that's up 20% on potential vaccine news because these have been faded before. A lot of people were asking about Gilead. Gilead has really fallen significantly. I've been really playing this one. Some stocks you play wrong. This one I really got right. I did not rebuy it because I had a bad feeling that all the good news was kind of priced in. That appears to be the case. It's in free fall here right now. I do believe you have some support at 70, so it could bounce there the first time. Valuations okay down here, but again, all this positive news from Remdesivir, if I'm saying that right, was all baked in. And now it's like, okay, and if the drug doesn't work as great as we thought it was going to, which some studies are, potentially going to spin, some people are saying it may not be that great. I mean, then what do you got? You're back to a biotech stock that's still struggling for growth. You're back to a stock that's a value biotech. So you're back to, it's got value in the 65 to 68 area. So would I be a buyer at 65? I think so. 68, maybe. 72, you might be early. Just my opinion.
This one was just the way it reacted on those pops, right? It went up over 80, they were faded. Up over 80, they were faded. Up over 80, 85, it was faded. So,
what really hasn't been doing that, though? I mean, you think about how many stocks, and obviously Shopify, but even in some of these pops in Shopify, we've had some pretty good down moves. There was a 100-point sell-off in there. there's been some money to be made in playing the fades. That's just what I've been saying, is buying the dip, selling the rip. I'm like a broken record around here, but it continues to work. It's why, I've had the last 2 months have been my best 2 trading months in 10 years. There's a reason for that, because I'm buying dips and selling rips, and it's been working. And you know what? In the last month, you just think about that. If you're always buying when you're down 200-300, and you're always selling when you're up 200-300 on the Dow, if you're looking at 30 handles on the S&P, look at where we've gone. We started April on the SPY around 283, or no, sorry,
trading range,
middle of April. We've been in a trading range for a month and a half, and we're at the top of the trading range now. Are we breaking out to 300? I think so. I think we're going to sneak our heads above 300, but I'm not buying that breakout. I'm not coming in and saying, well, we're above 300. I'm going to buy it now. We're going back to all-time highs. I think the fade trade's still on. I think you're still going to get opportunities. But, if you're buying yesterday, you're making money. If you're selling the day before, you were making money. So I'm going to continue to do that. Gilead has been a poster child for it. It's been a play. Every time it's had positive news and rally $10, it's been a sell. Every time it's sold off significantly, it's been a buy. Now it's sold off significantly. So it's probably going to be a buy at some point in time. Am I going to get a shot at 70? Maybe, but at 72, I'm just early. I don't have that much. Like, I could see it going to 70, so it's not that easy of a pitch. You buy it at 72, are you going to make money on it? Probably. Eventually, it's going to get some type of a pop in here, but I think you get it cheaper.
Let's go to Roku here. There was a headline this morning out of Variety that Roku looks like they're going to be able to have the HBO Max service on their platform when HBO Max launches at the end of May. And Amazon will not have HBO Max. Roku is up a little bit on that news here this morning, but let's take a look at the chart.
120 is the resistance point. It's tried it twice. Until I can get above 120, I think shorts control it here. So let's see what it does. It gets up to 120, might test it here today. Can it take out 120? Because then it might get interesting. You're out, if you're playing it from the long side, it's at 112.48. Starts making new lows on the move. I want no part of it. It hasn't really participated in the last little while. It kind of looks tired to me, which makes me a little bit concerned. There's better places for longs, in my opinion, than Roku right now. This chart doesn't look great.
Yeah, Dennis is referring, simple technical analysis we like to follow here. 120.09, 119.99. Those are your highs from your last 2 sessions. I'd even take a look here at 118.45. That was a 4-day closing high after hitting that 12.48 level. So you might even run into trouble ahead of that 120 double top. It had that monster run in March, just like a lot of other stocks. It hit its high level. It's going down, but it's certainly, you don't really need to head for the hills yet. I mentioned Dennis mentioned that 112.48. Well, you had another low at 112.69 on May 4th. So got to hold that area. Take that out. I wouldn't be so concerned about the 111.36, but that's major support you're leaning on at 112. Let's call it 112.70 in Roku.
And then we'll do one more. A lot of people in the YouTube chat asking about Mark, M-A-R-K.
I played this for a while. We know that I've talked about it on the show. I sold too early, and then the last chunk I sold almost right at the top at $2.55. So I wish I would have sold all of it up there. It's showing some life again. This is a play. This is a speculative capital only play on the reopening, looking at the thermal imaging.
Correct.
So Fleur is the more safer play. I'm long Fleur still. It's actually got the thermal imaging. This, to my understanding, is more kind of like a software play in the thermal imaging arena. And it had the big pop. We've run from 50 cents to 255. I believe we've seen the high. I don't think it's going to be revisited, but I don't know. I tend to think I'd be more of a seller here, that the story has cooled off now, but it could get hot again. I mean, we haven't reopened. This thermal imaging stuff could get hot again. So if it got above $2, it gets interesting again. But speculative only. I feel like the story, I'm out of it. I feel like the story has cooled off now, and I'm out.
Yeah, I think you do have a little bit of overhead supply in this one. You went from 266 to 121, 240, $1.20 move at $1.20 to $1.20. Man, if this thing got up to 240, and I see a high when it really started to come down at 268. That'd be getting half of this move back. Volume's kind of coming down too after that, after peaking at 215 million. So people will get out. I think for now, unless absence of some crazy news. First, you need to take out 195. That was the high from yesterday. And I think right now, base case, unless there's some really incredible news on it, you got to best case 240 here for this one.
If it gets back up there again, it could take it out. This story could get hot again. This is a very small company, that can have wicked moves. And we already saw the wicked move. I bought this stock at 40 cents because it's hung out there for a couple days, but I thought the story could get hot. We talked about it. I was like the thermal imaging plays. We talked about Fleur. I talked about Mark. And the stock obviously went. I sold too soon. I sold some at 60 cents. I sold some at 80 cents. And then I sold some in the dollars, and I sold the rest of it. I got on the top 255. I wish I would have, held it better. But again, we know me. I sell too soon always. So I could see the trend is still there. The overall trend is still up. So it's not broken. I could see this story getting hot again. But right now it's too cool for me to, not.
It's actually 195. It's actually I was wrong. 50% retracement's 195. I did some bad math on
which we kissed yesterday.
Yeah, so I'd be careful there. But
I'd be careful too. I don't want to see this above $2 before it gets interesting again.
All right, Spencer, you want to wrap things up for today?
Sure, that will be it. You can catch the replay of our show on YouTube or via our podcast, which is on, as we mentioned, Spotify or iTunes or SoundCloud or Stitcher, or I believe also the Google Podcast app. Thanks to our guest. As far as tomorrow's show, we'll be joined by the cow guy, Scott Shillady. He will join us at 8:35.
We love the cow guy.
We do. In the meantime, please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a great rest of your day. Joel and I will be back with you at 3:40.
Yep.
Till then, stay safe.
Yep. Just I'm hopping on hot mic here to cover the CNBC and some whatever tickers I missed in the chat. So see you guys on hot mic, Joel 317.
All right. We're off.